In this video, I'm going to cover possible entries because there's always more than one entry, right? We don't have to pounce in right away. So you get things like the riskier entry, which is like, the minute it hits here, you can enter here. But it's riskier because you don't have a confirmation yet, right? In fact, wait, I'm going to show you on the screen. Hold on. There we go, look. So if we zoom out for a minute and we see this, look, it's a brilliant area of value to sell from, right? It's been proven time and time again. Doesn't mean that it's not going to break it and go. It could very well break it, come back, retest and go, right? There's multiple things that can happen. Anything can happen in the markets, right? So I am massively a fundamental trader, heavily based on fundamentals, i.e., your data here, your data from trading economics. Then after I look at the fundamentals, I then come across the data to see what the banks are doing. Hold on. I use Prime Market Terminal for this. There's loads of different websites you can use, right? I use Prime Market Terminal because I think it's great. I'm already used to all the different segments. Let's have a look. So what you could do with data, right? Before I then cover the technical side, I will come back to it. So NZD, USD, let's have a look. So overview, you can look at overview. First of all, seasonality, it's usually a buy in October. So look, see here, we're going to get a dip before it then takes off, right? Saying it's going to sell just now. Let's have a look at DXM. DXM is dumb money index. That's what retail traders are in, right? And retail traders are pretty much always wrong. Look, 77% of traders lose their money. So when 70% of retail traders are always losing their money on this platform, that means 77% of the time they're wrong, right? So why would you copy them when they're all in sales? Let's have a look at COT. Now, COT means commitment of traders. So what happens is every single Wednesday, all the massive institutions, corporations, Barclays, JP Morgan, Goldman Sachs, Merrill Lynch, blah, 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 all the other privates as well, they have to submit by law the trades that they're in, right? And that's the kind of prevent insider trading. Not that it will, but that's what it's for. And every kind of Thursday that gets reviewed, and then websites like this can collect that data on a Friday. Well, the public can collect the data. It's just that websites like this put all that data together for you, right? So it's easy to digest and easy to see. Now look, NZD USD. It's kind of 60-40, I would say, but the banks are mostly in buys, right? They have reduced the amount. Excuse me. They have reduced the amount of longs. Let me just check. Open interest. Yeah, okay. Yeah, they have reduced the amount of longs, but that's usually just a profit take, right? So I wouldn't really be entering this just yet. If we look here, right? Sorry, I'll do it on trading view. So it's because everyone has trading view, right? It's easy to see. So yeah, there's multiple things that can happen here, right? I know that's small on your screen. It's small on my screen. I will zoom in a moment. To just don't worry. You've got these different areas. You've got this area here, and could it come back and retest this area here? Could it come back and retest here? Absolutely, it absolutely could. So you've got this potential entry, right? I'm going to zoom in here and show you. When you look on the 4 hour, this looks like quite a decent entry, right? Look, it's like, oh, there's your confirmation close. Now, you could enter that, by the way. I'm not saying you couldn't enter that. You absolutely could. But for me, look, there's no pins, right? One of the kind of giveaway telltale side is there's no liquidity grab. Normally you get a build-up of orders. Normally you get a push to the top. Look, you get big pins. You see that? You get a push to the top, then it goes. Push to the top, then it goes. You get orders. Look. I'll zoom in. Sorry, it's a pain in the arse. Look, you get the orders, and then it goes, right? Very rarely does it just give you, no pins and then drop. There we go. It normally gives you some kind of liquidity grab. So what does that tell me? It normally tells me that this may not be the move. Now, yes, the market could just absolutely melt from here. Yes, it could, right? But it normally tells me that something like this is going to happen. Bang. Then it'll push up again. Liquidity grab. Sharp away. boom, and then it'll start going, right? Something along those lines tells me what it's potentially going to do, right? So I'm just going to bide my time and waiting. What else? What else? If it continues to go long, what you'll see is you wouldn't be entering until it breaks that. So what you'll get is it will pull down. It will retest this zone here, right? So if you imagine there's a line across here right now, pulls down, retest this, breaks away, comes back for retest, reject, and then it goes. So then your entry would be here, right? That's your possible entry for buys. Although you would then have to look to the left, say, is it worth buying? So you could measure the distance between here and here, and it probably is worth it. 100 odd pips. It's all right. It's not amazing. It's okay. Obviously, I do swing trades, right? So I'm looking for a lot more, but it is tradable, yes. However, in terms of fundamentals, would I then want to be taking buys, against, would I want to be buying the New Zealand dollar against the USD? And the answer is absolutely fucking not, right? So that then brings me back to the chart. I say, okay, am I going to enter this trade now? You just fine to mark it up, and be like, okay, this is what I would do. But then you have to reevaluate and be like, well, would I even take it? No, I wouldn't. Why? Because the USD, even though they're cutting rates and you've got things are starting to slow down slightly, blah, 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 and everyone's predicting a recession and all this kind of carry on, it's still 100 times stronger than the New Zealand economy, right? The New Zealand economy is dog shit. So the way you have to think about it is this. Let's imagine you are one of these big guys, right, that works for Morgan Stanley, and you've got a $5 billion account, right? And your job for the bank is to make profit and minimize risk, right? Now, excuse me, you have to look at world economics, right? So in doing so, if you're working for the bank and you're about to place a $300 or $400 million trade, right? You're essentially saying, if you're entering buys in NZD USD, you're essentially saying to yourself that you believe the New Zealand economy is safer to put your money and potentially is going to yield you a greater return than the USD, than putting your money in the United States of America. Now, that's not the case, because fucking USD data is absolutely dog shit. And even if USD numbers continue to dwindle and go down, it's not enough to deem the US economy weaker than the New Zealand economy, right? So you're just wanting to sell this. So right away, I know that if this breaks above, comes here, it starts pushing up, I ain't buying it. What I'm doing is I'm waiting for it to retest this zone here, and then I'll be entering the sales, right? That's it. That's all you're doing. Now, sorry. This is the 4 hour time frame. Could you enter here? Yes, you could. You could, right? I'm not going to enter yet. I just think I think it's going to push a bit higher. Take out these previous highs. What you normally get is, you're going to get this, look, bang. Why does it do that? Because before markets move, they have to generate liquidity, right? Now, if you look here, where is all the liquidity? All the liquidity is right here, right? You could say it's here. Now, why is that? Because all the liquidity is essentially in everybody's stop losses, right? Now, although people say banks and market makers and blah, blah, blah cannot physically see your stop loss, some people say they can, some people say they don't. The truth is, I don't know if they can or if they can't, right? Let's just say, even if they cannot see where your stop loss is, they know it's there. Why? Because every fucking retail trader puts their stop loss, tight stop losses, guys, make your stop loss tight, right behind the previous high. Every retail trader does that because they want to keep stop losses tight and blah, blah, blah. It's bollocks. As Dr. David Paul says, the stop loss needs to go where the stop loss needs to go. If I was entering this trade as a sell right now, right, my stop loss would be at least here. At least there. I don't know if I'd quite put it this far, but I'd definitely have it up here. If I was going to enter that yet, right? Now, on other reasons, if you look up the other time frames, we'll just zoom in. Another reason why I wouldn't be entering it just yet is look, you have, you've got this strong weekly candle. We don't have, pardon me, we don't have any candles yet showing weakness. Look, the last daily candle is strong. So ideally, I would really like to see, if I was going to enter it, I'd like to see a daily candle close, and then then on the second candle, the wick back up here and then down, right? So this area here, you could enter sells, and that's your higher risk. Why? Because you don't really have the confirmation at that point, right? That yes, this is melting. This is your confirmation here. This one here would be your confirmation, right? Where it comes down, breaks away, comes back up, retest, candle close, enter, and away you go, right? That would be a confirmation for me. And that's your higher probability, safer trade, right? This is your high risk trade, lower probability. But it why people would enter it, you'll say, well, why are they going to enter it then if it's higher risk? Because it's people are greedy, right? And it's got, obviously your price is better. So the minute it starts breaking down, you're going to be in profit a lot sooner, right? And that's why people do it. But yeah, I would just be waiting. Let's have a look at some other entry positions. Look at this one here. Look, you've got the small blue. If you're actually supposed to mark up the wick as well. So if you mark up the wick, look, you'll see mark up this blue wick here. I know I've got it over there. I'm going to cover it. This blue candle here with a large engulfing, you mark up this wick. You wait for the market to come back and retest it. This one here is good confirmation. You could enter there. As soon as it passes this line here, you could enter, and away you go, right? There's nothing wrong with that. AUD CHF. Yeah, CHF is stronger than AUD at the moment, so you could look to take this as a sell. I would just wait and see, a candle close first. But remember, this can happen. Look, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. You've got 11 days where you can enter this trade. 11 fucking days, right? So there is no rush, no fucking rush, I'm telling you. And here's the thing, right? You're never going to miss a trade. You're just simply gonna, miss the entry. And I'll explain what I mean. Let's say you're waiting for this daily candle to close, right? And let's say the daily candle goes like that. You're expecting it, to close here, and it ends up closing here, right? And you're like, oh shit. You can't enter it there because it's already too low, because it's a higher probability it's going to come back up and retrace deep, right? So at that point, all you're doing is you've just missed this entry. All you're going to do is wait for it to go this. Bang. Retest. Boom, boom, boom. Away you go. You can enter here, or you could enter here. So you've got 1, 2, 3 possible entries over the space of a couple of weeks, right? So there's never any rush. There's never any rush. I mean, look, this is a good area of value to sell from, but I wouldn't sell it because fundamentally it's not a sell. Let's see what the data is saying on that one. Banks are all in sells, so that's quite decent. That's good to see. Let's see what DXM are doing. Dumb index are kind of 50-50, or 53-47. That's kind of 50-50. Seasonally, I like looking at seasonality. Seasonally, October is buys. That's strange. Who's this now? I think I've got a full host now. Right, hold on, guys. Sorry. Hello. And let's have a look at what we've got here. So it's fairly neutral for now. Let's go back to the charts. So what did it say? Let me have a look at that again. What did it say seasonally? What's this? Oh, wrong pair. My bad. Let's see what it said seasonally. Is it buys? COT is in sales. Okay, so banks. Look, so banks are now predominantly in sales, guys. They have decreased. Is that the long positions? Let me just check. Aussie. Yep. Decreased. Open interest. That is Japanese yen. Okay. Seasonality. Sorry. So we're here just now. It's going to take a dip and then take off. So let's have a look at what that should look like on the chart. Yeah, take a dip and then take off. That's it. So you could potentially sell from here. I'm just not, guys, because fundamentally, Aussie, although it's getting a bit of bad news just now, things are slowing. Not bad news, but things are slowing down for it. You'd be looking to buy it, and you just can't buy from here. If you were going to buy, right, you're either buying from down here or you're buying once it breaks the resistance. This resistance, once broken, now becomes the new support. Retest the support, and away it goes. So your entries for buys are in two places only. Two places only. Your entries for buys are down here, or they're up here. That is it. There's no other place to buy from, right? That's it. That's the fucking trade. That helps you avoid chasing the fucking market down, chasing it back up, and blah blah blah. All right. AUD USD. That again would be sales for me, so you could take the greedy early entry here. It does have a potential though to come back up, retest this zone here, right? I think it might, but you know what I think is irrelevant. The market can do what it wants. So the safest trade, in my opinion, is this one right here. This is the safest trade because you've got your confirmation, broke down below the lows, came back up for the retest, rejected, pardon me, and then melts. And that's what you're looking for. That's the safest trade. And you can see we've still got a fair bit of time for that to play out. You're talking 1 day, 2 days, 3 days, 4 days, 5 days, 6 days, 7 days, 8 days. You know what I mean? You're potentially talking a week before that plays out. My apartment's full, guys. I'm sorry if you can hear loads of noise in the background. Right, sorry. Shit, hold on. Everybody must know when I'm doing live videos and then they just come in with the brass band. What's this? Nah, I wouldn't touch it. Again, look, you can see how many times it comes back to your areas, right? Look, hits, goes, hits, goes. So they are phenomenal. But yeah, I want to share this with you. Hold on. Let me just top up my yerba mate. So when you look at this, right, it's very important that when the market, when you've marked up an area, right, and the market comes back to hit your areas and you don't take the trade, I physically chose not to take these trades. I saw them play out and I was like, yeah, I'm not touching them yet. You don't have to take every single move. Just, oh, I could have made money there. Oh, man, I knew I should have entered that. I could have made money. It's not about that. It's about picking the best fucking trades, right? And that takes time. Yes, there will be times where I'm like, oh, shit, I missed that one. It just flies. But, you know, like I say, you never miss a trade. Trades are like buses. If you miss one, there's another one fucking 2 days later. You know what I mean? So, yeah, this is just, it's just bouncing around just now. There's no real direction, right? I like this. See, you see this is in a range right now. You know, it's in this kind of boxed up range. I like this when you get the clear, what do you call it? Clear trend, right? I love trading because then you can just let it run and run and run and run and run, right? And you can get a lot of bang for your buck with very, very small risk. Like, look at this, right? Let's have a look here. What's this time frame? Daily, right? Look at this here, right? Here's your previous resistance. What do you always say? Once the resistance is broken, it then becomes the new support. Comes back, retest that support. There's your entry. Away you go. Can you imagine, right, if you entered 0.25% risk here, right, and then your stop loss was down here, and that just ran, and it ran, and it gave you this, and then all you're doing is you're just moving your stop loss up, and then it starts running and running and running from quad. Even if you don't scale in, you could absolutely scale in here. Look, boom, breaks away, comes back, retests away, goes. You could enter again here, absolutely. But imagine if you didn't, right? Imagine if you just took one small 0.25% trade here and you just, excuse me, and you just let it run to here. You would be making fuck tons of money from 0.25%, right? And that's the game that I'm in. You just need to wait for it to play out with my method. With Lee's method, scalp trading, intraday trading, you need focus, right? You need to be on the pulse. You need your finger on the ball. But with my method, you need to be patient. I'm in this for the long term. I ain't in this to, close in 10 minutes and blah, blah, blah. What's that? Euro NZD. It should be buys. Let's have a look. Euro NZD. Where are they? Come on. What the hell is it? If I know, I've probably there you go. I don't even think I've got it on there because it's such a shit pair. That's tradable. Look, right. Look at what it is. Look, you've got a small candle, right? You've got a large engulfing. When this happened, I'm just ignoring the market, ignoring it. I'm simply waiting for it to come back and retest this. So you could enter here, you could enter here again, right? This area here will be bang on. I'm telling you, it'll be bang on the 786 Fibonacci, which is really golden zone. Right, where are we? There we go. Look at that. 786, right there. 786, bang. It can retest the 50, it can retest the 618. I'll just get rid of this because it's already passed. But what I've found, guys, in general, is that the market usually always comes back and retests deeper for the 786. Now, for anyone that's like, oh, what does all this mean, 786? It's a Fibonacci measurement, right? Fibonacci sequence. However, in monetary terms, it's just showing you areas of value, right? And the deeper it goes, the better value. So if it comes to, the 500, the 0.5, that you could enter that trade, right? If it comes to the 618, let's say it rejected here, right? You could enter that because it's a decent area of value. However, the best area of value is the 786 plus, right? Let's see what that looks like. There we go. Look. So you could enter that. You could enter that if you wanted, but let me just think. Euro NZD. It's okay. You're only going to really get it from here to there, though. But you could trade it, right? Excuse me. You could trade it. It's not a good pair. Look, it's just rangy, right? And those of you that know me, look, I don't like trading in this range. Can you? Yes, but look, see that? Look, where are we? This is what I like, right? Trends. Trading in the trend, boom, 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 because then it's just going up. You're just following the trend the whole time. I don't see this when it's flat. I personally don't bother to trade it. I just mark these up because you guys can take it if you want, right? It's just something that I just don't do it. Yes, it means that I do, overall I take a lot less trades, but like I say in all my videos, we're not here to trade, lads. We're here to make fucking money, right? And more trades does not equate to more money. It does fucking not. It more often than not equates to more fucking losses, I'm telling you. GBP CHF, it's a good area to sell from. It's decent. Could potentially, I just don't think this is it. I think it's going to pull deeper, lads. I just genuinely think it's going to go like this. Boom, boom, and then crack on, right? And let's say it doesn't, right? Let's say this just melts down. You'll be like, oh man, you've missed it. If this candle comes down to here, you think, oh, you've missed it. You haven't missed it. I fucking guarantee you. You might have missed this entry, aye. But what's going to happen is it'll come down here, boom, it'll stop. It'll then go this, one candle, two candle, three candle retest, boom, boom, boom. And it will just fucking melt. So you can either enter it when it comes in here, or you can enter it here. Or if it goes back up and retests here, happy days, even better entry. And then you can wait till it comes back down, retest here, boom, and away you go. That's it. So when you see this, don't let FOMO make you enter to go, oh shit, it's gonna go, because you don't know it's gonna go, right? Nobody knows it's gonna go. I just think there's no real liquidity grab here. There doesn't have to be a liquidity grab. Look, I mean, there's not one here, right? But yeah, it'd be nice to see one, right? It'd be nice to get a pullback. And if it doesn't, all you're waiting for is breakdown, come back, retest, and away it goes, right? They always come back. Look, the markets came back, retested this. Boom, came back, retest. Away you go. Look at that, beautiful. Look, small candle, large engulfing, market breaks away, comes back for the retest. Excuse me, candle close for your confirmation. Now, this is the daily time frame, right? You wait for this candle to close. So you're waiting one full day for this candle to close, right? On day 2, you can enter here anytime. On day 3, you can still enter here, you know, and day 4, you've got 4 days where you could enter this trade. 4 fucking days. So the question you ask yourself is, what's the rush, right? What's my fucking rush? There's no rush. Just sabar. Sabar, sorry. You're not even Indonesian. It just means have patience. I still think this could go. It's that pound NZD. I think this could come back down and retest this zone because it hasn't quite tested it yet, right? I think this could really pull down, boom, retest deeper, and then go. Again, you just need a little bit of patience. Wait, no. GBP USD. Look, this is one I marked up, and this one I marked up. And when this came here, when this started coming down, I actually said to the guys, I don't believe that's it. I think it's going to fucking pull back deeper. And you can see on this occasion, it is pulling back deeper, right? It's just an intuition thing, guys. You know, it may not have done it. It may have broken down here, came back and retested, at which point we could have entered here, but it hasn't done that, right? It's just and look, what else do you notice here? The candles are above the 200 EMA. What does that generally tell you? You're looking for buys, right? Here, candles are below the 200 EMA. What does that tell you? You're looking for fucking sells, right? Here is your prime, look, your prime example of an entry. Market's coming down, boom, boom, right? This part here, I'm ignoring. All I'm doing is, you see this small white candle and a large engulfing? Mark up the small white candle. You're waiting for the market to come back. Boom, boom, boom. Close, entry, away you go. And that's it. And it just happens time and time again, guys, honestly. Time and time again. Look, if you're going to take this for a thingy, small. Let's say you're still looking for sales. Small candle, large engulfing, mark up the small candle. When the market comes back and retests this area, enter sales, away you go. That's it. Resistance. Once the resistance is broken, if you drag that across, once that resistance area is broken, what happens? It becomes the new support. And look at what we've got in here. What have you got right there? Small candle, larger engulfing, right? Bang, you mark that up, drag it across in this zone, comes back, retests, and away it goes, right? It happens time and time and time again. And this is actually why we're kind of holding off on oil right now, right? Oil's at this really weird kind of crossroads, because when oil is below $75 a barrel, oil companies are losing money, right? So they want it above $75 a barrel. However, we've got loads of really, really bad news for China, which means if tons of manufacturing and stuff in China is halting, they're not going to be using as much fuel, right? Because you need fuel for the trucks, fuel for the factories, and blah, blah, blah. If all their manufacturing is melting and it's getting really bad numbers, you're not going to be using as much fuel. So there's going to be more supply and less demand, which makes the price drop, right? When there's more demand and not enough supply, it makes the price go up. So we want to look at that. And again, look, we've got support. Once the support is broken, what happens? It becomes the new resistance. Bang, bang. Now this could come up to here. You've got your small. This is 78 Fibonacci from here down. You've got the small white candle, the large blue engulfing. Bring that across. You potentially see this, right? Bang. Here we go, and away it goes. But we really need to see what happens. Here's an interesting one on oil. We'd done sales from here down, right? I think it was from here down as well. I can't remember, but I know we got a real mixed bunch of sells and buys and blah blah blah. Now here's the thing, right? We done quite a lot of oil trades with quite a lot of wins. And when we were in this stage of the game, right, I think at one point we had done about 10 to 15 trades, and pretty much I think all of them won, right? All of them were winning trades, none of them were losers. And when it came down, we were buying here. But just to show you, right, if you just select your trades, see, even if you just waited here and you entered sells, right, and it came back up for the retest of this zone, sell again, boom, back up for the retest of this zone, sell again, you know. If you had just done that and you just selected that kind of method, you would have made fortunes as well, just selecting one. We were doing both sells, buys, you know. But I just would like to show you, you don't always need to be doing that, right, to make money. If you just done sells, if you just entered one sell here and you completely left it alone, you know, you'd have made tons and tons of money. Now, of course, it's easy to say that in hindsight. I understand that. I'm just trying to show you, give you examples, right? I know that anybody can sit here once the market's actually moved and be like, oh, if you just done that. That's not what I'm trying to do, right? I'm just trying to show you. We don't need to catch every single move, right? You just want to catch those little fucking sniper shots. And look, here's a prime example. Look at that right there. Look. So this is my edge. See, when people talk about an edge and a strategy, right? See, when I see this, boom, 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 I fucking love it. I'm not entering the trade yet, right? Let's say I know we're looking for sales at this point. See, when you see this white candle, large blue engulfing, right? And I see this happen. Look, drag it across. I'm just waiting for this market to come back up, retest this zone. One blue candle closed. There's your confirmation. Enter the trade, and away you go. Boom, boom, boom. That's it. Away you go. That is my edge. And look, small white candle, large blue engulfing. Let's move that across, right? You mark up the whole thing, drag it across. Look what we've got here. Look, boom, breaks just beyond it, which is perfectly fine because it's just doing a liquidity grab, right? See the pin, boom, and then as soon as it breaks this area here, you're entering sells. Away you go. That is it. Honestly, it's the same thing, time and time and time again. That's it. So whenever my edge comes into play in my strategy, right? There's no humming and hawing. There's not like, is that it? Is this it? Like if this comes up here and retests in this zone here, I'll be like, yeah, that's it. Boom, rejects on the 200 EMA melt. I'll be taking that. You just need to wait. That's the fucking thing, right? I know it's frustrating. It's frustrating for me. You know, you guys have got jobs. Like this is how I make a living, right? So, fortunately, I'm in a position where I don't have to chase trades. Like if I didn't make money this month, it doesn't matter, right? That's a good place to be in trading. You don't want to be in trading and be like, fuck, I need to make money this month. I need to pay my bills, because that's not how trading works, guys. Sometimes I'm waiting 2, 3, 4 weeks and I'm sitting here and I'm like, there's no fucking trades, you know? So that's just the way it is. Now see, look, you see how it's broken that? So now it just tells me that this trade setup here is you know, the kind of higher probability of what I'm looking for. Break above, retest, and go. Not just one candle, you know, you actively want to see it break up, come back down, a couple of candles, reject, and then off it goes, right? It's happened here, and it's happened here. That's pretty much it. Indices aren't doing anything. Well, I mean, they're not in an area where I can buy from. Nah. They're kind of plateauing just now. Yeah, I just wouldn't sell indices. Bitcoin, see again, look, small candle, large blue engulfing, retest, rejects, goes. potential retest rejects, goes, right? Same again, small candle, blue engulfing, market cross, retest rejects, in you go. That's it. You're just waiting for it to hit your fucking area. Look, small candle, large engulfing, retest rejects, goes. Retest rejects, goes. You're just waiting for it to hit those areas. Same again, look. That's just ranging right now. So in a range, very, very simple to trade from a range. All you're doing is, right, when it gets here, you're selling. When it gets here, you're buying. That's it. That is it. How easy it is to trade in a range. All right. Let's have a look at 20-year bonds. Well, these are coming down now. See, so these are now going lower. Let's have a look at the currency. So see, you could still see some push down to this zone here. I think we could push down to the zone here and then start building back up again. Then what? So what you'll see is, right, you'll see this. Right. So here's a prime example of a kind of full market layout, right? Sorry if it's small on your screen, but I just can't really do anything about that for this example. So look, order block, boom, boom, boom. What you potentially see is this. Boom, 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 boom. Building up some orders. Bang, 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 bang. Boom, 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 boom. You know, this is kind of typical market structure that you would see. So this isn't a currency pair, right? This is just the index of the dollar. But if this was a currency pair, this is how simple my technical strategy is. All I'm doing is I'm waiting for the market. Whatever the market does here, I do not give a shit. I'm not chasing sales. I'm not chasing buys. I am simply waiting for the market to come all the way back, hit this area here, retest, reject, melt, and I'm entering sales. That is it. I'm not trying to chase this down. I'm not trying to chase this back up. I'm just waiting for anything the market does outside of this box. I don't give a shit. I'm not getting involved with it. And that's how simple it is, right? You just need patience and discipline, because when the market does move down, you're like, well, it's already here. I'm anticipating it going here. I could enter buys. You could enter buys, but just that's not your strategy, right? It's not your fucking strategy. You need to stand by your strategy and don't break your rules, right? The worst thing you can do is, I'm going to cover this right now, right? There is such a thing as a losing trade, which is a good trade, and there is also a bad trade in which you made a lot of money. Sometimes you can break your rules and be like, yeah, fuck it, I'm going to take that. And it's not part of your strategy. It's not part of your edge. It's not part of it's actually breaking your rules, that you're going against fundamentals. You're going against the trend and blah, blah, blah. And you might make a lot of money and be like, fucking boom. That's a terrible fucking trade. Just because you make money in a trade doesn't mean it's a good trade. Because what it'll do is, you've made money one time breaking your rules, your mind then switches to thinking, that used to be part of my rules not to trade. I've just made a ton of money. Maybe I'm going to start trading that more often. And you're going to trade that more often, and it's just going to keep coming back and biting you in the arse, right? So that's an example of making money in a bad trade, and it's not something that you want to do, because it will then create bad habits. You can have a losing trade, and it was a good fucking trade. Just because you lost money on a trade doesn't mean it's not a good trade. So you're like, well, how is that? It's because you may have followed all your rules. You've stuck to your fundamentals. You've stuck to your data. You've stuck to your technical analysis. You've entered the market bang on your zone where you previously anticipated it would go to. That's all good. You never broke any of your rules, but the market just simply went against you and hit your stop after that. That's fine. That's what it's all about. That's why we risk so little, right? 0.25% is fuck all. And that's an example of a losing trade, but it was a good trade, right? Because you lost your money, it just went against you, but it was a good trade. Why? Because you followed all your rules. You don't want to be getting into a habit of winning bad trades. You know, fucking, oh, I'm not going to scalp anymore, and then you take a scalp and you win. You're like, oh, great, I'm going to do it. And the next scalp, you go in with higher lots, and you just fucking, you just shaft yourself. Or even if it's a swing trade, you get in here, but you're going against fundamentals, and and it goes against you. But and then you've made money. It's a snowball effect of loads of bad shit will follow that because you'll create a bad habit. You enter loads of shit trades that you should never have entered, and you would never have entered if you hadn't had that winning bad trade, right? So yeah, just because you made money in a trade does not mean it's a good trade, and just because you lose money in a trade does not mean it was a bad trade, right? If you followed your rules and you just simply lost trade, that's fucking fine. That's part of the game, right? Every single business in the planet has expenses, and for traders, it's just losing trades, right? The only thing that we can control is risk management, how much we're willing to lose each trade. We can't control how much we're willing to gain because we're willing to gain everything, right? We just need to follow the market and let it play out. But there's four potential outcomes. I'm going to wrap up on this. There's four potential outcomes in trading, right? And you want to eliminate one of them so that there's only three left. The four potential outcomes is small wins, big wins, small losses, big losses. Excuse me. You want to eliminate big losses. How do you do that? You stick to your percentage with it. I do 1/4% per trade, which is peanuts. If you want to do 1% per trade, that's entirely up to you, right? I just do 1/4% because I'm managing people's accounts and it allows me more. It allows me to enter multiple trades, at low risk and blah blah blah, and play the long game, right? But if you're like, look, 1/4% is too small for me, I want to do 0.5% or 1% per trade, you can crack on. It's your money. You do what you like. Just don't go too nuts, right? I'd say kind of 1% per trade max is fine. But you want to, from those four, if you can eliminate big losses, that means that the only three potential outcomes in every single trade that you're going to take from that moment on, right, is you're either going to have a small loss, a small win, or a big win. Now, that's fucking fantastic in the kind of law of probabilities, right? That's where you want to be. And you can control that. You just simply don't risk too much money. That's it. That's how you eliminate big losses. Don't move your fucking stop loss and blah blah blah. Always make sure that you place your stop loss in the right place. If I was going to enter a trade here, I would not be placing my stop loss here and then later on going like that and fucking dragging it up. When I go to enter it, I would be placing it here right away, and I would make my lot size relevant to where the stop loss is, so it's still the same percentage, right? What puts people off, where people start to get greedy, is they'll come here, right? They'll be, oh, if I just put my stop loss here, or let's say they're going to put it here above the previous high, right? They're like, yeah, I can enter here at fucking 2 lots, so that's great. Oh, that'll give me, and if it comes to here, I've made 700 quid, that's great. And what happens is the market then starts to fucking push up and get closer, and then they go, oh, actually, I'll put my stop loss here. And then the market gets fucking closer again, and they're like, "Oh, actually, there's a high over here. I think I'll just put it there." And before they know it, the market's just coming up, fucking retesting this zone, and they just keep moving their stop loss up and up and up and up. And what they're doing is they're just creating bigger fucking losses. You don't want to do that. You do not want to do that. You want to keep the stop loss needs to go where the stop loss needs to go, not where you want to put it. So it's nice and tight and all that bullshit. It needs to go where it needs to fucking go. It needs to go out of arm's reach, right? And that's the way to do it, guys. Okay, so I won't waffle on anymore. It's bloody 43 minutes of me chopping away. But yeah, if you've got any questions, if you're watching this on Facebook or YouTube, you get any questions, yeah, drop them in the comments below. I'll happily answer. For me, in my strategy, there's nothing that I'm really trading right now. I'm not saying there's no trades, because you might have a different strategy and you might go, oh, I've taken 3 trades today. That's absolutely fine. I'm just saying for my strategy, my edge in the market and what I want to see, there's nothing that I would take right now. We've got potentially, let's have a quick look. NZD USD potentially, and I think it was pound CHF, but I don't think I would take that yet. I want to see some more confirmation on this. It's done this part. Look, came down, it's came back up. It's played out this part. We just need to see it play out this part now, all right? So I won't be entering it yet, but let's see what happens later. Don't forget, we have a full education Discord channel, which I'll show you right now. We've got all this here where I do live trading, so anybody can watch this live. It says you are live here. We have got all beginner videos. We've got newbie videos. We've got beginner videos. We've got swing trade education. So newbie videos is like for newbies, as it says on the tin. If you're someone who's brand new to trading, you're like, what's a lot? What's a spread? What's a pip? You know, and all this. What does TP mean? You know, really, really basic shit. Then you would watch newbie videos first. Beginner videos is more my business partner Lee. That's more like scalp trading, and it's more for setups. Because he does scalps, he can't give signals, right? Because by the time he's typed out, you've already missed the trade. So he explains his strategy here for like fake out strategy, you know, second entries, first entries, blah, blah, blah. He explains all that in here. And then swing trading education is my method of trading, what I look for the swing trades. And here we'll get extra swing trades if you just want it. Risk management, excuse me. Trade reviews, we always give reviews after trades. So before trades, what we want to see and, you know, how things panned out, even if it's a losing trade or if it's a winning trade, we cover it all, you see. Why it was a win, why it was a loss, forex trading books, trading psychology, blah, blah, blah. Signals, so whenever I enter a trade, I give the signals here. So while you're learning, you can actually copy us and make money while you're learning. We have got trade results. If you want to look at the guy's results here, there we go. Big John, 380 odd quid. Mass Chris, 500 quid. Alex Ross, 114. Now, this is each day, by the way. This is each day that we charge £97 a month, and this is guys copying our trades each day. So they've already made their money back in one day, and the rest of the month to make profit, right? Big Ryback, 551. Ian, 375. Alex, 122. Excuse me. Brilliant. Yeah, so we also offer an entire month completely free, guys. 1 month, full access, completely free. So you can come on board and you can see, are we full of shit, or can we actually teach you and mentor you on how to become profitable trading? All right, you can see it for yourself for a month. At the end of the month, if you wish to cancel, you need to go on and cancel it on our website. We can't cancel it because when you jump in and you set up your details for the free month, we're not taking your card details. You're giving your card details to Stripe, which is it's an outside organization. It's not us. We don't have your card details. It's Stripe. So if you come on to us and you're like, hey, cancel my card details, we can't because we don't have your card details. We're not a bank, right? So that's why you need to go on yourself and cancel it yourself on our website. It takes you 2 seconds. You just log in and you hit cancel subscription, and that's it. And you won't be charged any. But if you don't, it will automatically charge you. And it's not us that's charging you. It's Stripe that's charging you because you made the agreement with Stripe, right? So it's like, and if you forget, yeah, there's nothing we can do about it, guys. That's just the way it is. It's like if I have audiobooks application on my phone and I decide 1 month I don't want to fucking pay for audiobooks anymore, and I don't actively fucking cancel it on my application on my phone, it's gonna keep taking it out every month, right? Because they don't have a crystal ball. They can't read your fucking mind. I have to tell them that I want to cancel it. It's the same with us, guys. You need to cancel it. All right. So that's it. And if you decide to stay, it's only 97 quid a month, guys. It's peanuts. And not only do we provide the education, but we provide full mentorship. Every single day, I always say to the guys, I'm free today. There's no trades. Does anybody want to jump on and do one-to-ones? I will gladly do one-to-ones with you. I do not charge any extra for one-to-ones. I know loads of people do. I don't. I'll just come on and I'll give you examples. I'll say to you, right, if we look at pound yen right now, let's say we're looking for sells. Show me on your, you can share your screen with me on here, and I'll say, show me where you would enter, tell me why you've chosen that area for entry, and where would you exit and why, and we'll run through loads of scenarios until you gradually pick it up and you can do it by yourself. Okay, guys, thanks a lot for watching. I'm Ryan Mack. This is the trading, guys. If you're watching this on YouTube, you will get the free month access in the link below in the description. Or if you're watching this on Facebook, it will be above. Okay? Take care. Have a good week.